Okay, traders. Now, I just want to run through one of the key aspects of identifying when a trade has gone stale, right? This is an important thing to understand because we don't just sort of get into a trade and stick with it. I mean, that's the general scenario when the trade starts. You want to give it at least 3 or 4 hours before you come back and check out what's going on. But at what stage do we start managing the position? And what I'm talking about is trying to identify when a trading opportunity has gone stale, right? I was going to say stalled, but it's the same thing. Now, I just got Euro up here, right, on the hourly charts, and there's a number of different scenarios here where I can show you where, how to interpret if a trade's gone stale or if it's just pausing for the next move. Now, the Euro started going up here sort of March 4th. It started moving higher, right? At this point here, now this is the start of an up move, and we don't have any sort of trend lines to work with. I mean, I can draw a trend line in there, but it will be very steep, off these lows, then come to this one, and then this one, and this one as that price action develops. But initially, if you've gone long on the back of a fundamental release, whether that's weak US numbers or strong Euro numbers, you're looking to go along with the opportunity. Now, as I said, like with an opportunity, see how it's got to, like it's rallied from 1740, it's got up to just above 118, around 118.20, and it started to trade sideways. Now, what you would like to do in this situation, because we don't have trend lines, you've really got to identify, okay, is the trading opportunity still good or not? Now, this is the benefit of having a good trade plan as well. And what I mean by that is if you get into the trading opportunity, say down here, your stop loss is below the market, having a trailing stop loss will give you the opportunity to stay in the game, especially, in a situation like this. So it rallies 60, 80 points and then just starts trading sideways. And this is commonplace. Now, over the course of sort of 12 hours, 6, 8, 10, 12 hours, if it's still moving higher, or if the currency is still going to keep moving to the top side, it should happen within that time period, right? If it starts to go over a couple of days and it hasn't actually moved beyond the short, tight range it's got, well, you probably want to take the cash off the table. In this situation, it's just, traded sideways, say through the Asian session, right? A good 12-hour period, a little bit longer, early Europe, and then starts to continue higher. So as I said, if you've got a trailing stop, at this point, your trailing stop, is going to be at least, say, 20 or 30 points from the market. That gives you the opportunity to stay in the position. Has this position gone stale? I would say it's getting pretty close, right? If I just move this across a touch, it's got the situation here. You would not be mistaken if you thought, well, you know what, I've given it plenty of chance. It hasn't really broken down. That's the key part. You haven't seen a big spike higher. You could potentially take some of the position off the table. And once again, a good thing with your trade plan, if you've divided up your entry into 4 different possible trades, you get the potential to take some of the cash off the table and leave some of it on, looking for the next move. But check out this first move where it's sort of just stalled, which is commonplace, to where it's rallied the next leg up to 119, 119.20. Now, this trade here, it's got there sort of during the 6th. It's there for the 7th, 8th, 9th, 10th, 11th. It's just traded sideways. Now, this is a situation where I'd say the trade has gone stale. It's just trading sideways. It's lost all momentum. It's not going anywhere. At this point, it's probably wise to take your cash off the table. Of course, you could still have a trailing stop loss here and just leave it there. But if this thing hasn't gone anywhere for over a 3, 4, 5 day period, it generally means that the opportunity is waiting for the next key data release or information news to give it the drive to the top side, right? And in that situation, the smart play, in my opinion, is, okay, take the cash off the table, square the position up, you get rid of that stop loss, and then you're ready to trade the next opportunity. Now, if there's more US or Euro numbers coming out, which is going to give it direction, well, that's a fresh trading opportunity, right? And you can look for the next trading opportunity here. And once again, you see the currency go up. It's continuing to grind to the top side. Then over the course, so that's like the 14th, 15th, 16th. Once again, it's trading sideways over 2 or 3 days. That opportunity to me has gone stale, right? And what I'm really talking about when it's gone stale is I'm looking sort of, short term. If the structure of your trading opportunity, right, is a long-term trading opportunity, say you get into the euro trade down here and you're looking for, say, 200-300 points, well, your stop loss is going to be at least 50, 60 points below the market, below the entry. And that can be the trailing stop loss that you have. In that profile, you're not so much worried about the market stalling unless you're looking at the daily charts. And that stop loss with that sort of level of protection, say 50 points below the market, it's going to trail the market all the way up. And it gives you the opportunity to maximize the overall medium-term trend. If you're thinking you can see 300 points, okay, you've got your, let me just change the color there. You've got your entry, you've got your stop loss. And as that trade goes higher, your stop loss trails the market, right? And that's where a good medium-term trend with consistent macroeconomic data, especially whether it's strong euro or weak US dollars, you can get a more consistent move, right? So understand that's where it happens. And then as that trading opportunity goes, the eventual, just coming back to the longer term, medium to longer term sort of setup, your trade will eventually get stopped out when the currency dips. And you're happy with that. That's the plan. That is part of the plan with the medium to long-term trading opportunity. But coming back to what I really wanted to sort of discuss and explain, short-term trading opportunities where you're trading, say, 2 or 3 times during the week, identify situations where it has gone stale. This one here, I don't think it has gone stale. The trade here from when it hit sort of 119, the figure, trading sideways for 4 days, on a short-term basis, this trade has gone stale, right? That's essentially what it is. Then the next trading opportunity from this point, okay, you get the next move to the top side. This starts trading sideways over 3 days. That to me on a short-term basis, it once again has gone stale. Then there's a fresh opportunity at the top, starts trading sideways again. And you start to get a bit of a feel for it. It's trading sideways. This one here sort of gets up there the 16th, 18th, 20th, 21st. As I said, if it hasn't gone anywhere over 3 or 4 days and it sits in a 20-point range, you know what? That opportunity's gone stale. Look for the next one, which doesn't mean you don't get the next move to the top side. It just means you're protecting your cash and taking your profits as they come up. So whether you're trading, let me just do 2 profiles here. So you get in short term, you look for the opportunity, stalls, that's fine. You get the next leg up, starts trading sideways, you're out. You can get the next leg up, start trading sideways, you're out. You get the next leg up, trading sideways, you're out. You get the next leg up, trading sideways, you're out. Anything that's trading sideways over 2 or 3 days for me is the trade's gone stale. Same situation, if you have a longer term, medium to longer term profile trade plan, you've got your stop loss below the market. And as the currency goes up, right, this thing goes up, what is it, like 100 points? Okay, your stop loss, say it's down at 117, is now at 118. That trails the market here below the market. And if things go right, you don't get taken out until 120. You know, are you going to make more money or less? Well, we haven't seen long-term, consistent long-term trends for a while. You're going to make some good cash there, probably a smaller trade size because you've got a larger stop loss. But with if you're trading short-term, you've got, say, 1, 2, 3, 4 opportunities there with controlled risk. You're probably taking as much, if not more, off the table, right? So there's 2 ways to do it. But the key part to this video is understanding when it's gone stale. You're looking at the trade going sideways over 2, 3 days for sure. That's when the situation has gone stale. This little pocket here is just a pause. It's like a pause. You see it quite often during the Asian session in particular, where there's no euro or US numbers. And that's where you do stay in the position. The trade is just getting going. And that's how you identify if a trade's stale. If a trade goes stale, think about managing the position. It's a good way to build capital in your account.